If you ever felt stuck in your trading, you have a discipline problem, you're not able to hold winners longer, or maybe it's like a revenge trading is what you're doing, then this video is for you. I'm going to go through all of the questions that you guys sent in the last video. I kind of went through all the comments line by line, and we made notes of, okay, what are the common problems people are facing? What are they actually struggling with? And in this video, I'm going to break that down and go line by line. So as I told you in the last video, right, I'm still getting in the hang of making these YouTube videos, so I'm still figuring it out. But I want to make sure that you guys are taken care of. I want to take care of this community and make sure that all the struggles that you're facing, we're actually able to overcome it once and for all, right? So in this video, I'm going to go over all the questions that you guys sent, and we're going to dive in deep into that and see how we can address those problems so you can actually have the trading career that you always envisioned. So Christian asked the question. He said, he's struggling with revenge trading and he gets like a series of wins, right? He gets that momentum, but then he ends up giving it all back. Maybe revenge trades, he's getting into trades too late. He's often chasing. And first of all, that's a very common problem that almost every trader in some part of his journey goes through. And even if you're trading for a while, you'll still have those tendencies. So Christian, the comment that you made about you blowing up your account, that tells me a couple things about you. Number one, there's lack of discipline. There's lack of risk management there. And that is the biggest thing we have to fix, because trading is not about how much money we're going to make. Sometimes it's about how much money we're not going to lose, right? Risk management is paramount to any trader's career. You have to be in it to win it, as the saying goes. But to be in it, you have to have the chips to bet, right? If you don't have any chips left, you can't bet, and you have to be in it to win it. So blowing up the account tells me there's a lack of risk management. So a couple things you have to do to fix this. Number one, make sure that you're risking the amount that you're personally okay losing, right? You should be good with that loss, and you should accept that loss before you even get into the trade, not after, right? And number two, those points where you're going to get out of the trade needs to be identified before you get into the trade, not after. A lot of traders make the mistake of they get into the trade and then they decide, when should I get out? And the stock is going down, it's about to hit your stop loss, but you're like, there's another support level down below. Oh, there's another moving average. And then it goes down to the moving average. You still don't get out because, well, now there's the 200 moving average right below. Let me hold it a little bit longer. Or, maybe the stock will come back up. So that's all hope. And hope is not a strategy. The next thing you need to do is to make sure that whatever you're risking is less than like 1% of your overall account. In fact, most newer traders start with like 0.5% risk, and then they earn the right to maybe risk 1% of their account. And then they work their way up to risking 2%. So most professionals, even they don't risk more than 2% of their account in any given trade. For me, I risk, roughly 2 to 3% of my account in any given trade. So even if I lose that trade, heck, even if I lose 4 trades in a row, I'm not going to be getting hurt. I'm going to lose maybe 8% of my account, but I still have 92% of my account left for the next trade, right? So if you're blowing up the account, that tells me that you are holding trades longer than you should have. You're not respecting your exit points. You're not respecting your stop losses. And when a chart breaks a stop loss or chart breaks a support level, you need to get out of the trade, right? That's just as simple as that. But risking less than 2% of your account is going to keep you long enough in the game to be able to get good, to be able to have those winners. But it's no point if all of your winners are making 2%, 3%, 4%, right? 1R, 2R, 3R, but then you end up losing like 5 winning trades in like one trade. That's not a recipe for success. So make sure you are risking less than 1%. That's going to ensure you're never going to blow up your account. So Jen asked the question. She says, she's struggling to wait for the right quality of setups, and she's just jumping into, something that might look good, right? And the way that happens is because, A, that tells me that your trading plan is not well defined. You don't have specific criteria on when you're going to enter or when you're going to exit. Or perhaps you have that exit criteria or entry criteria, but you're not being patient enough to actually wait for those opportunities to set up. And half of the battle in trading is not actually the act of trading. 90% of good trading is all about waiting patiently, waiting for the right opportunity. As the saying goes in the Stock Market Wizards book, a trader's job is to wait patiently until there's money just lying there. And all you got to do is just go and pick it up, right? So if you're chasing trades, that's because of impatience. That's because either maybe you're getting bored, you're getting revenge trades, and some days, honestly, the market is just not conducive to good trades. Some days there's just no good trades around there. And that's when you have to train yourself to sit on your hands, right? And not control the mouse and the keyboard all the time. And that comes, and I've seen this often, by the way, Jen, you're not alone. Very common thing, right? A lot of people get bored in the markets. The markets are not really conducive, but they feel like they have to find the next trade. I have to trade. I'm a trader. And they end up taking trades that are not necessarily good. But isn't it better, rather than taking trades that don't meet our criteria, they're not high quality setups, and we end up losing money? Isn't it better if we don't trade at all those days, right? Because not losing money is better than taking a bad quality trade and losing money. And you know what happens sometimes? Sometimes you take a bad quality trade and it works. And that feeds your bad habits because you're like, no, it worked. It's going to work again. But see, anything can work once, anything can work twice. Good trading is about what can work consistently over a long enough time period. It's about a series of 100 trade sample size. It's not about the next trade. So I would ask you to be more conscious of your patience, right? Go build a checklist. That's what a lot of traders do, right? Take a pilot, for example. A pilot could be an experienced pilot. He could have flown 10,000 hours, tons of flights, but yet every single time before he flies, he's going to go through his checklist every single time, no matter how long he's been doing it. So same thing with you. Do you have a checklist for your trading? Do you have a checklist of when you're going to enter? Because if you go through the checklist, that'll keep you out of trouble on just jumping into the next trade. If it doesn't meet your criteria, pass on that trade, right? Focus on the next trade. It's all about good trading is all about the quality of trades, not about the quantity of trades. So Chris asked a question. He says, hey, I'm struggling with time and capital for trading. So let me kind of break the biggest myth out there. Capital is not the issue. Time, yes, time can be an issue. We're going to address that here. But capital is rarely the issue because whatever percentage you make or lose, it's this percentage is percentage, right? So whether you make 20% and you only have $10,000 to trade with, whether you have $1,000,000 to trade that you make 20%, 20% is 20%. So the key is to be patient because when you mentioned capital is the issue, that tells me again, you're a little bit impatient. You want to get there quick. You want to get to the home run right now. You want to have everything right now. But good traders, they build their capital over time, right? So first you got to get the system down. You got to get the process down of what makes a good trade. And then you got to just get consistently follow it. Because if you're going to trade for a living, we don't have to trade like we have to retire next week, right? If you're going to trade for life, then focus on growing the account. Sure, it's going to be a small amount of capital in year one. But if you do well, year two, you're going to have a little bit more capital. Year three, you're going to have a little bit more capital, right? So that's how I want you to think about this. And also think about how can we add more capital to our trading account. So I have so many students that I work with that live in California, they live in West Coast, they live in a different time zone. They wake up early in the morning and they trade with whatever capital they have. And then they actually are going out and doing their regular job, right? And then they take that income from their regular job and they fund it into their trading account. So now your trading account is growing. Oftentimes it comes with ego. People are like, I'm a trader. I don't want to do anything on the side. But no, if you're a newer trader, you have to, right? Because you have to pay your bills. You have to have your expenses. And if you come to trading with the mentality of you have to make money right now, you're going to end up making bad decisions. You're going to make decisions coming from a place of scarcity rather than coming from a place of abundance, right? So number one thing you got to do, think about, okay, what other skills do I have? Can I have another job? Can I have another side gig? Can I do something? And again, never be ashamed of what you have to do to get closer to your goals. So have a long-term mindset, right? Are you in it to trade for just the next year? Or are you in it to trade for a living, for life? If so, then 3 years goes by really quick. Think about it. It's 2025. It's been 5 years already since 2020, COVID. Does it feel like that? No, it just goes by like that. So if you maintain good trading habits, you're going to crush it in year 3, year 4, but just focus on growing your capital slowly and consistently. Don't look at what the comments are on YouTube and other people making a lot of money and bragging about their stuff. People who brag about their wins, they get quick successes. Guess what? It never lasts. It always gives it up. But if you trade the right way, you build good habits, eventually you're going to get there, right? I mean, take Jared, for example. It took him 4 or 5 years before he was consistently profitable. Take me, for example. It took me a whole year before I started making money. So if it's going to take you 1 year, 2 year, 3 year, 4 year, 5 year, doesn't matter if that's the goal that you're committed towards. So my question to you is, how committed are you to your goal? So the best loser wins comments. He says he's got the scalper's curse. First of all, I love your name and you're absolutely right. Best losers do actually win. Trading is not about, having those big wins. It's almost about controlling the losers and losing the right way. And losers are part of the game. I don't care about what other traders say. Every single trader loses. Okay. Nobody bats 100%. Nobody wins 100% of the time. Even I don't win 100% of the time. So even if I take 10 trades, there's going to be 2 or 3 that are going to be losers. But you have to learn to lose the right way. I hope you're living true to your name. The best losers win in this game. Learn to lose small amounts the right way. It's kind of like paper cuts. Get okay with taking the paper cuts, but then when you win, the winners need to be bigger than your average loser. So I think that's what you're alluding to when you said the scalper's curse, is that the losing trades you maybe keep holding on to, but the winning ones, you just get out too soon because you see a profit. And that's a fallacy in trading. They say, you can't go broke taking profits in trading. But no, that's exactly how most traders go broke. They take these tiny little profits, and then the losers, they keep holding on. So the losers are like $1,000 each, and the winners like $100. So now, again, the math doesn't add up. because you're going to need like 10 or 20 winners to make up for those losers that you had. So first, make sure your winners are bigger than your losers, or at least you have a high enough batting average or high enough win rate. Scalping is perfectly good. I scalp every single day in the chat room. If you guys have been there, you can see me do that in real time every single day. But then I'm very disciplined when it comes to my losers, right? And sometimes, yes, my losers could be big, but I win a lot. My batting average supports that. So I want you to go back and take a look at your own statistics. What's your win-loss ratio, right? What's your average winner? What's your average loser? And just do the math of if that strategy is even profitable. Because again, if you win, let's say 50% of your trades and you lose 50%, but if the winners are smaller than the loser, the math doesn't add up, right? No matter how good you trade, no matter best trade you take, the math doesn't add up. You're not going to make money, right? If you take 10 trades and on 5 of them you lose $100 each, you lost $500. But in the 5 that you're winning, you made $50 each. You only made $250. So naturally, you're going to end up in the negative at the end of the month. So there's only 2 levers you can pull in trading, right? A, how can I make more on my winning trades? Or B, how can I increase my win rate? So those are the 2 levers you got to pull. So you got to go back and take a look at your statistics and see why that is. And oftentimes, again, I've seen this over and over in trading. People say, I have this issue, I have this issue. It all comes down to your mindset in the end. Because the reason you're taking quick profits, the reason you're scalping out of those trades is because you're not confident in your trading plan. You're not confident the stock's even going to go there. And that lack of confidence usually comes from a lack of tracking, lack of statistics in your own trading. Because if you had the statistics over the last 4 years of your trading or last 1 year of your trading, a sample size of hundreds of trades, then you know exactly at the end of the month what your win-loss ratio is going to be, what your win-loss percentage is going to be. So then there, you have nothing to fear, right? Because even if the trade goes up, like, a little bit of a profit comes all the way down, stops you out, that's still okay. Because your statistics would have already showed you that that's the case. But if you're leaving money on the table consistently, trade after trade after trade, trade is working. So your technical analysis is good. It's working, but you're just not able to hold on. So again, that is a psychological issue rather than a trading related issue. And I would ask you to, okay, take some time, be a little bit patient. Where is that coming from? What am I fearing? Am I fearing the loss? Am I fearing the money? What is that core fear that you have? And you have to tackle that head on. Okay, so my advice to you, go back, take a look at your statistics, work out the numbers. Is this even a strategy that's profitable? Number one. And then number two, where are my triggers coming in from that cause me to exit that trade? Is it a lack of confidence? Is it a lack of trust? What is it, right? Dive into that core issue and address that, because I can tell you for a fact, if you keep repeating this mistake over and over and over again, no matter what technical analysis you learn, no matter how many chart reading courses you take, it's not going to work, because it all comes down to your discipline in the end. So Healthy Chocolate News has a question. By the way, just your name's kind of making me hungry a little bit here. So he asked a question that, the trade goes another dollar, just keeps going up, 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 and up. The trade is working, but I just sell it too soon. So it goes back to the other question that I answered earlier. What's your trading plan, right? Because if you had a trading plan, there's no emotional decisions you're going to make on the fly. Because right now it tells me you're making decisions on the fly. Like you get into the trade and then you're like, okay, ooh, I see a profit, I'm going to take it, right? You can't go broke taking profits. No, but that's exactly how people go broke. They take tiny little profits and they take these big losses. So here's a couple things I want you to test. Test a few ways of managing that trade. Okay, so you get into the trade. Let's assume it's a day trade. What happens if all of your trades that you've ever taken, you trail them 5-minute bar by bar, meaning every 5-minute candle opens, you raise your stop loss up. So you're not exiting the trade, you're not getting out, you're just trailing your stop loss every 5-minute candle up. Now that is keeping you calm, because you know you're raising your stop loss every time, so you're not going to give back all of your gains. And B, you're giving the stock the ability to actually go up in your favor. So there's a few other management styles you can test out. So 5-minute bar by bar is one that I mentioned. Okay. The other one I mentioned is the 2 or 5-minute 9 EMA. So 9 EMA, for those who don't know, is the exponential moving average. You go on your trading platform, you add an indicator, you select EMA, and you put the number 9 in there. So that's the 9 EMA. And again, all I'm talking right now is for day trading, right? If you're a swing trader, you can use the 21 EMA, or you can even use the 9 EMA, but you can use it on a daily chart. Whereas a day trader might use it on a 1-minute, 2-minute, or a 5-minute chart. So if you ride the 9 EMA, here's what it looks like. The stock is going in your favor. As long as it's above the 9 EMA, you're going to stay into the trade. You're not going to exit that. You got to be disciplined, okay? And when the stock finally breaks that 9 EMA, you exit the trade, you take your profit or take your loss, whatever that might be. That allows you the ability to hold on to trades. Because if you're selling too soon, again, it all goes back to what is your trading plan? And I don't think you have one. Again, no disrespect. Most traders don't. Right? That's why I'm here, to help you create that trading plan. So in your trading plan, I want you to write down what is the criteria that you're going to use to decide when to stay in it and when to get out of it. And it needs to be defined before you take that trade. So then when you take that trade, your only job as a trader is to follow your trading plan. It's not to make decisions on the fly. Because if you make decisions on the fly, each candle going up and down, guess what? You're going to end up making emotional decisions. You're going to make decisions based on fear. You're going to make decisions based on greed, and your emotions will impact that. So the key to avoid that is to create a trading plan and put in the criteria, the specific criteria, or how you're going to decide to get out. So I gave you 3 things to test: 5-minute bar by bar, 5-minute 9 EMA. And maybe the other thing you could do is, if that's a little too much for you, is just to say, I'm going to put my target 2 to 1. If I'm risking $100 a trade, as soon as I'm up $200, that's my target. That way you ensure that your winner is bigger than your loser every single time. And if you have that ratio of 2 to 1, you only need to be right 40% of the time. You could take 10 trades. You could lose on 6 of them. As long as you win on 4 of them, you're going to make money. Because what's 4 times 2? It's 8. Right? What's 6 times 1? It's 6. In the end, if you lose on 6 trades, you win on 4, but the winner is twice the size of your loser, you're going to come out ahead. That is the statistical approach traders need to have, and not just decide on a whim what they're going to do. Because that isn't that the same as gambling then? If you don't have criteria, think about that. Kareem asked a question that, when it comes to simulator trading, he's doing well, he's making money, but then as soon as he goes live and starts risking his real money, the results change. Trades are not working out. So again, that tells me it's, again, emotional related. Again, guys, here's the psychology yet again, coming in again and again and again. Most struggles, that's why I tell people, is all about your psychology. Because guess what? In a simulator account, there are no emotions because it's fake, right? It's not your money. It's a demo account. You're not going to actually lose real money. So you're able to stay emotionally disciplined when you're trading on a demo account because it's so easy to hold on. There's no emotions. And as soon as our real money comes into play, what happens? The mind starts working. Fear, greed, I don't want to lose money. Like all of your beliefs regarding money come into play. So that's number one. It is emotional related, number one. But number two, your other question about VWAP and all of that, again, you don't really want to use your stop loss right under a VWAP because oftentimes stocks will pierce the VWAP a little bit, then they'll come right back above it, and then they'll continue their uptrend. This happens over and over again. So if you're getting constantly stopped out, but the trade is still working, there's 2 issues here. If you're getting stopped out and the trade is just continuing to go down, it never works, then maybe it was just a bad trade. Maybe it was just a bad setup. Or maybe it was a good trade, just not that day that it didn't work. But if you constantly find that you get stopped out under the VWAP and the trade just comes back up and goes higher, then just give them a bigger stop loss until you figure out what the right stop loss is going to be. Oftentimes, people use such tight stop losses. Why? Because they want to get to their winner quicker. They want to have a bigger winner. They want to get to their 2 to 1, 3 to 1 target faster. So they end up using really tight stop loss because in their mind, they think, if I use a 10-cent stop loss, stock only needs to go up 20 cents for me to make 2 to 1. Right? And then what happens? But you constantly keep getting stopped out because you're giving it not enough room. You're using a very tight stop loss. So try this approach and let me know how it goes in the next video for you. Is every single trade you take, and again, you could even go back and take a look at your last 50 trades and work out the numbers, is if I gave all of my trades 2 times the stop loss. So if you were giving them 20-cent stop loss, maybe you give them 40 cents. What happens then? So this is where the homework comes in. Okay, this is where I'm going to challenge you a little bit to go back and take a look at your last 100 trades and see, what if I gave them double the stop loss, double the room? Because now you're giving the stocks a wiggle room to wiggle around and end up working. And the other question is, again, which I suspect, because a lot of traders, when I ask them to go back and take a look at the trades, they're like, I don't even track them. I don't even have a spreadsheet. You don't even have a journal. So my question to you, do you have a journal? Do you have a spreadsheet? If so, put in the time. Take a weekend, go back and take a look at your trades and see what happened if I give them extra room. And if you don't have the data, which is, again, it's okay. Most traders don't, but most professional traders absolutely do. So start today. Start Monday. Monday market's going to open, or Tuesday market's going to open, whenever you're watching the video. Take that and say, okay, I'm going to give all my trades double the room that I normally do. Right? And then make a log of your spreadsheet. Make a log of all of your trades in a spreadsheet, right? If you run a business, are you not going to collect the receipts? Right? Every business collects receipts. They need to know what the profit and loss is, what's working better, what product sells more, what products sell less. So why is it that we treat trading differently? Why don't we treat it like a business? Why don't we have a log of every single trade I've taken? In fact, when I trade in the newsletter, right, or in my chat room, every single trade I call is tracked in a spreadsheet. Why? Because that's where the magic is. I can go back in my statistics and see what I can fine tune, what I can make a little bit better. What if I gave my trades a little bit extra room? Would they have worked out? So that is what I would tell you. If you constantly find you're getting yourself stopped out, you're probably using really tight stop losses. Give them more room and see how that pans out. Vivid Theater asks a question. He says, I'm struggling because I have a 9 to 5, so I don't have the time to day trade, or I don't have the time to do this properly because, I have a job. So here's the thing: if you have a job, and if it's a 9 to 5 as it relates to Eastern time zone, then don't even get into day trading. Just being honest with you, I want to save you the time, because the best times to day trade is between 9:30 and 11 o'clock. And if you're at your job, you don't want to be day trading, because guess what? You're not going to do the job the right way, and you're not going to trade the right way, right? So it's not worth it, right? Now, but if you are somebody who's talking about 9 to 5, but in, let's say, the West Coast, then you can still do it, right? Because a lot of traders that we have in our community, they are from the West Coast. They trade in the morning from like 6 o'clock to maybe 9 o'clock, and then they go to their actual job. So if you're in a different time zone, you can make it work. But if you're in the Eastern time zone and you have a 9 to 5 job, then don't get into day trading, but don't be disheartened. You can do swing trading, right? Swing trading is where we're holding stocks for the long haul. Maybe we're holding it for 2, 3 days. Maybe we're holding it for a week. Maybe we're holding them for a month. Now, as a swing trader, you could absolutely do this with a day job. With swing trading, you don't have to be in front of your computer every single day. You don't have to, right? You can even come back from your job. You get home like 6 o'clock, 7 o'clock. You open up your charts. You start looking, okay, what is a good setup? What is a good setup that I've learned? And now you're going to find those setups on a daily chart or a weekly chart or a 60-minute chart. And then guess what? You can place the orders in your brokerage account the night before. Here's my trigger. Here's what I'm going to get in. And then this thing known as OCO order or a bracket order, what that allows you to do is as soon as the trade triggers, it automatically puts in your stop loss. It automatically puts in your target in the system. That's called a bracket order, because we're now bracketing our entry. We bought the stock at $10. We automatically put a limit order for our target, let's say at $13. And let's say we put our stop loss at $9. And now you go about your job. The broker is going to handle it automatically. The software is going to do it automatically for you. It automatically will get you into the trade. And if it hits your target, it'll automatically sell it for you. If it goes down, hits your stop loss, it automatically will exit that for you. So again, you don't need to day trade. Swing trade. In fact, a lot of swing traders make a lot more money than day traders do, because day traders are just so active. They just try to do everything every single day. But oftentimes the patient trader makes the more money. Patient traders make more money usually than the average day trader does. So what I want you to do is forget about day trading, because again, I want you to focus on your 9 to 5 job. And then because that will allow you to take money from your 9 to 5 job, maybe even if it's 10% of what you're making. And every single month you can add it to your trading account. Now that's growing your account, and you can swing trade. And swing trade is a great way to make money. All right. I know a lot of people that are full-time swing traders. They don't even day trade. But guess what? They make a lot of money. They do really, really well. So that's what I would ask you to do, is go into a higher time frame. Go into a daily chart, 60-minute chart, weekly chart, and start identifying those exact patterns that you've learned on those charts, and set your orders in the night before, and then go about your job, right? Maybe in a lunch break, you can take a look at your stocks and see what they're doing. Maybe you can get home and see, okay, you know what? My stock is now up from $10 to $12. I'm going to raise my stop loss now to break even. And you could do all of that the night before, so you don't have to look at the markets even when they're open. So that's what I would tell you to do, is focus on swing trading rather than day trading. Post hardcore singer asks a question. He says, he's really burnt out by tracking and back testing and all of, and building all these trading plans, and he wants to find something that he could do in an hour a day. So again, if you're building trading plans plural, then that's a problem, right? You only need one, right? Number one, you only need one plan to be successful in the markets. You don't need plan A, plan B, plan C, plan D, because you're going to get confused, and that's why you're burnt out, because you're trying to build all these trading strategies, all these trading plans. But honestly, good traders only need one or two trading strategies. They only need to get one or two patterns. And that's the biggest problem I see online, is people want to learn advanced technical analysis. I'm like, but you haven't even mastered the basics yet, right? And then they're like, teach me this new technical strategy. What's the great pattern that's working now? I'm like, but I've already given you like 20 other patterns that are working right now. Why not we just focus on that, right? So you don't need more patterns. You don't need more chart abilities. You don't need more back testing. What you need is one or two strategies that become what I call your bread and butter. That's your core strategies, right? Now I have many different strategies, but I still have like two or three that are like my bread and butter. And that's what I focus on 90% of the time. So that's what you need. Focus on, again, if you already have the back testing, first of all, I want to congratulate you, because most people never even do that. So the fact that you back testing puts you already ahead of a lot of traders. Now here's what you got to do. You got to go back, take a look at your back test, and see where is the money coming from, right? The majority of the winning trades, what strategy is that? And you're going to find strategies that are working better than the others. Then I want you to do is, I know it's going to be hard, discard everything that's not bringing you the money, discard everything that's not giving you the result, and the one or two strategy that you find in your back test that is working, just do those, right? Don't try to build all these trading plans and all these different strategies and trying to learn every little detail about trading, but just do what you already know. And as far as figuring out something you can do 1 or 2 hours a day, I mean, that's what we do every single day in the chat room, right? Every single day, I only trade from 9:30 till about 11:30. Sometimes I'll trade until 12, right? But oftentimes I'm done by like 10:30, right? So that's an hour a day strategy. So there's two ways you can do that. Number one, okay, you could have a gap strategy, right? Where we're trading gapping stocks. Again, there's tons of videos on our channel. There's tons of courses on our website. You can trade gaps, right? You can trade the 3 bar plays, you can trade the breakout patterns, you can trade the 1 minute flash pattern that I talk about all the time. You can trade the ORBs and just focus on those. Trade for an hour a day and put yourself a time stop. So if you're going to say you want to trade an hour a day, so when your clock turns from 9:30 to maybe 10:30 or 11 o'clock, shut your platform down. Don't stick around all day, because that's how you burn out. If you're sticking around all day trying to find these strategies, back testing all day long, yes, you're going to burn out, right? So you got to be disciplined enough that when you hit your time limit of an hour or two a day, stop it, close your platform. Okay. The other thing you could do, which I do every single day, is I scalp options. Okay. That's my strategy. We're going to talk about that in the future videos. So in that, I'm looking for short-term gains, very small percentage moves in a stock to capture those things in options. And I try to only take 3 trades a day. I take 1 to 3 trades a day. When it comes to option scalps, I hit my profit target for the day, and then I'm disciplined enough to call it quits that day. Okay. So again, you don't need more back tests. You don't need more trading plans. You just need to go back to the back test you already have and figure out what's the strategy that's the best one out of the bunch, and discard the rest and scale the strategy that's actually working for you. So hopefully that answers your question. So guys, here's the thing. I'm going through all of these comments, and even though majority of these issues and comments or struggles sound different, but they're actually exactly the same, right? So I was going to go through all of these comments, but what I figured out is you're all going through the exact same thing. You just don't know it yet. You think it's the charts, you think you're missing a strategy, but all these comments that I'm seeing are about, lack of discipline, lack of trading plan, getting out of winners too soon, right? And you're holding losers longer, you end up blowing your account, you don't have the patience to wait for the right setups. And these all goes back to the psychology, and that's why I told you it's not about chart reading. And again, we will spend time on chart reading because, again, that is a prerequisite. You need to know how to read charts. But at some point, you got to take that knowledge and run with it, right? And you got to work on your mindset. So personally, for me, I don't really read any trading related stuff or trading related books because I don't need more information, right? And again, same for you. You don't need more information. You need to know and execute on what you already know, right? Because true knowledge is applied knowledge. Otherwise, you're just hoarding all this information. And I see this all the time. People are like, Anmol, you're really good at mindset, you're really good at psychology, but we want to see you read charts. We want to see your technical analysis and your strategies. And again, I'm going to share that with you, those technical chart patterns and strategies. But what good is it if you just move on and try to learn something else after that and you don't actually apply what you've learned? Because all of these comments that I've read, it's the same exact struggles. It's all about not being able to hold winners. So again, fundamentals of trading, let's break it down. You get good at reading charts, right? You figure out core strategies. This is what I want everybody to do. Pick your top 3 patterns. Forget 20 different patterns. Forget I want this indicator, 1,000 indicators. I want the order flow. I want to look at the level 2. Oh, look at that big market maker order. There's so many things in trading. And guess what? Everything works and everything doesn't work. So what I mean by that is, there's so many ways to make money in the markets. Some people do it fundamental analysis. Some people look at charts. Some people do indicators. Some people look at order flow. It's not that one person's right or wrong. They all work. It's just you have to find that one strategy that works for you. So fundamentals, take the top 3 patterns, discard all of the rest. Then you start trading those patterns with a really low risk level, okay? And then you start tracking your trades. Am I better at longs? Am I better at when I short? Am I better when I trade in the morning? Am I better when I trade late in the day? Am I better when I hold for bigger targets? Or am I better when I look for smaller targets? Or am I better as a swing trader or a long-term trader? Or am I better as a day trader? And even as a day trader, am I better at the 1 minute chart, 2 minute chart, or am I better at the 5 or 15 minute chart? So you have to take all of that data, right, to help you create that core trading plan. And a trading plan should be as simple as, like, if you were to give it off to somebody, let's say you hire an assistant and she doesn't know anything about trading, but she's really good at, placing the orders on your behalf. The trading plan you should give it should be easily understood. Most traders' trading plan is this. Yeah, I'm going to buy this stock, and if it goes up like this, if it starts looking bad, I'm going to maybe scale some, maybe I'll sell some. And then the rest I'm probably going to hold on until it goes to that target. Ooh, but if I see a red candle, then maybe I'm allowed to, maybes will kill your trading, right? Maybes will kill your trading. Again, let me say it again. Maybes will absolutely kill your trading, right? A trading plan should be very concrete, that if you were to give it to somebody who knows nothing about trading, they can still follow it, right? So sample trading plan, right? I get into the trade. I'm going to buy it at this price. I'm going to put a stop loss, right? And let's say I'm losing $100 per trade. You need to know exactly what you're going to lose, right? And then you have a target in mind, and maybe you say, okay, my target's going to be 3-to-1. So if I'm risking $100 a trade, I'm going to look to make $300 on that trade. But then if the stock goes up 1-to-1, now I'm up $100. Maybe I'm going to raise my stop loss, right? I'm going to raise my stop loss to break even. And if the stock goes up maybe a little bit more, let's say it goes to 2R, then I'm going to start raising my stop loss on every 5-minute bar by bar. So see how here there's no room for emotions. There's no room for, ooh, what am I going to do? There's no room for making up your rules on the fly. You've already created a trading plan, and all you got to do is just follow that criteria, right? Follow that criteria, and that'll get you to your trading goals closer than just like literally anything else. But it has to be well defined. It has to be black and white. It cannot be gray areas, right? If you have gray areas in your trading plan, that's the problem. It needs to be black and white. Here's my target. Here's my stop loss. And then how are you going to manage the trade? Are you going to do a 9 EMA trailing method? Are you going to do a 5-minute bar by bar? Are you going to go break even when the stock goes 1-to-1? What is it you're going to do? And then do the same thing on all the trades. The problem happens with traders is one trade, they get out too soon. The other trade, they keep holding. One trade, they give more room. One trade, they give less room. One trade, they decide to get out at 1-to-1 profit. The other trade, they decided to 2-to-1. So now your trading is going to be random because you're doing random things. So your results are going to be random, and you're going to be able to see that in your equity curve in your trading account. It's going to be a lot of randomness. Now you're hoping to make money, and that's not a strategy. So it needs to be black and white. Here's what I'm going to do. Kind of like a software, right? If somebody's building a software, it's what? It's if-then statements. If this happens, then do this. That's how all algorithms work. If this, then that. That's what you're going to do in trading. If the stock does this, here's what I'm going to do. If it does this, then here's what I'm going to do. So you know exactly how to respond to that situation. And that is how you stay emotionally in control. Emotion control is not about, listening to a lot of Tony Robbins tapes and getting pumped up and motivated. Emotional control comes with a disciplined trading plan so that there's no room for your mind, because your mind will always be affected by emotional state in that moment. You see your P&L fluctuate. One day you're red, one day you're green. That's going to affect your psychology, and you're going to make decisions from that state. So the thing you have to do is black and white, follow the rules. There's no room for error. All right, so hopefully you guys got something out of this video, and I was able to address and answer some of your questions. Now, again, if you need further clarifications on any of this, you want me to go deeper on a specific topic, type it in the comments, right? I will definitely take some time and read your comments. And that's what I wanted you guys to see, that whatever you type in the comments, I'm actually reading them, right? It's not just a VA or we have an assistant going over them. I actually personally read those comments because I want to see, what do you need help with? How can I help you? So if you want to write a comment, I'm going to read it. So keep those comments coming, keep those questions coming. In the future videos, we're going to slowly start diving into technical analysis and the charts and the way I see charts. I already have identified one thing that I know a lot of traders are doing wrong. Again, so stay tuned for the next video on that specific topic. We're going to slowly start to ease you in. I don't want to overwhelm you. I don't want to bombard you with all this information because, hey, first, let's get to know each other a little bit, right? Let's get to know our styles of teaching and trading. And then slowly we're going to build on all of these concepts and start to go deeper. But this video was just to show you that, okay, I am going to read your comments. I am going through them. I do care about you, and I want to see you succeed. So until next time, stay tuned.